Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amar Kedia from Ambit Capital. Thank you, and over to you, sir.
Thanks, Aman. Good evening, everyone, and welcome to the Q1FY24 earnings con call of Barbeque Nation Hospitality Limited.
Operator request has been initiated. If you'd like to cancel this request, please press star 0 again.
And whole-time director, Mr. Amit Betala, CFO, and Mr. Vijay Sharma, Head of Investor Relations. Before we begin the presentation, I would like to remind you that some of the statements made into this conference call by the company may be forward-looking in nature and may involve risks and uncertainties. Kindly refer to the earnings.
Signal for an operator who may help you. You have pressed star 0 for the operator assistance. How may I help you? No response. Joining back to the call.
Barbeque Nation. During the quarter, we recorded a revenue of 324 crores, which is an increase of 15.6% on quarter-on-quarter basis and 2.9% on year-on-year basis. This is an encouraging performance considering the prevailing subdued demand scenario and higher base impact in the first quarter last year. Both our dine-in and delivery business recorded very strong sequential growth, primarily driven by volume growth of over 20% across both segments. This growth was offset to some extent due to lower average realization in the dine-in business because of various offers and promotions across select markets. Our key focus during the quarter was to drive volume growth, which we have been able to achieve successfully. We undertook various initiatives during the quarter to enhance guest experience through upgraded restaurant designs, elevating culinary experience, and further strengthening service culture. We remain committed to drive cover growth and will continue to invest with the objective to enhance our guest satisfaction. During the quarter, we opened 4 new restaurants, which included 2 restaurants in Barbeque Nation, India, 1 in Toscano, and 1 in international markets. We closed 8 restaurants during this period, resulting into network of 212 restaurants. Our medium to long-term growth remains intact, and we are pursuing a clearly defined strategy. Our focus will be on driving SSSG and profitability for the India dine-in business, scaling emerging verticals such as Toscano and international, and drive penetration of UBQ and Dum Safar. In addition, we will also look at expanding our brand portfolio, including inorganic growth. With this, now I hand over to Rahul to take you through the performance during the quarter, and thank you very much. Over to you, Rahul.
Thank you, Kevin. Good evening, everyone. Our revenues for the quarter were 324 crore, an increase of 15.6% sequentially and 2.9% on year-on-year basis. Our dine-in revenues for the quarter increased 14.5% sequentially and 1.3% on year-on-year basis to rupees 276 crores. Our delivery revenues recorded a strong sequential and year-on-year growth of 21% and 12.6% respectively to reach 47.3 crores. Both dine and delivery growth were primarily led by 20% volume growth on sequential basis. Delivery sales accounted for 14.6% of the total revenues during the quarter, which is the highest level over last 7 quarters. Same-store sales growth for the quarter was negative 7.7% compared to last year. Compared to Q4 FY23, we recorded a same-store sales growth of over 13%, which is primarily led by around 20% volume growth and offset to the tune of around 5% on account of lower dine-in price realization during the current quarter. Consolidated gross margin for the quarter declined by around 180 basis points sequentially and 280 basis points on year-on-year basis. While the cost inflation remained under control, this decline was primarily attributed to lower dine-in price realization of around 5% compared to Q4 on account of various offers and promotions undertaken during this period. The gross margin trend is improving on month-on-month basis and have recovered to historical levels in July 2023. Consolidated reported EBITDA for the period was rupees 47.6 crores, which is an increase of 13% compared to Q4 FY24. 23 and a decline of 35% compared to same period last year. Our pre-Ind AS adjusted EBITDA for the period was 18.8 crores with a margin of 5.8%. Pre-Ind AS EBITDA margin only marginally improved on sequential basis as the benefits of operating leverage were from sequential sales growth were offset by lower gross margin. Our restaurant network was stood at around 212 restaurants. This included 190 Barbeque Nation restaurants, 7 international Barbeque Nation restaurants, and 15 restaurants of Toscano. During the period, we added 4 new restaurants, which included 1 Toscano and 1 Barbeque Nation International. We also closed 8 restaurants during the period, which we believe had poor future economics. We also delivered strong quarter-on-quarter performance on revenue per outlet. Matured restaurant portfolio delivered an annualized revenue per outlet of 6.5 crores during the quarter, thereby growing 14% sequentially and declined by around 7% on year-on-year basis. The matured portfolio delivered a restaurant operating margin of 14.3%. This was relatively flat on a sequential basis despite the decline in gross margin. New restaurant portfolio is doing well. New restaurant portfolio reported an annualized revenue per outlet of 5.2 crores, which is an increase of 33% sequentially and 27% on year-on-year basis. The restaurant operating margins was 4.3% on this compared to loss of 1.2% in Q4 FY23 and profit of 6.2% in Q1 FY23. Our primary focus during the quarter was to drive volume growth, and all our efforts have yielded very encouraging results. We are positive about continuing this trend and gradual improvement in our margins going forward. We are focused to maintain our market leadership position in CDR segment in India. Our focus area for medium term would be 4-pronged strategy across Barbeque Nation India dining business, scaling emerging verticals, growing delivery, and portfolio diversification. In our Barbeque Nation India dining business, our focus will be to drive same-store sales growth and profitability coupled with cost optimization. We'll continue to invest in enhancing guest experience through culinary innovations as well as upgrading our restaurants. In our emerging business portfolio, our focus will be expansion-led growth for Toscano, coupled with maintaining our current SSSG and profitability. Similarly, for Barbeque Nation International business, we'll focus on calibrated expansion and maintain SSSG and profitability for the existing assets. Growth for delivery vertical will be focused on driving volume growth for UBQ, coupled with increased penetration of our biryani brand Dum Safar. We also continue to evaluate opportunities of brand portfolio expansion, both under organic and inorganic space, such that we further capitalize on our existing organizational strengths and understanding of our guests. With this, we can open the session for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1 at this time. The first question is from the line of Kapil Jagasia from Nuvama Wealth Research. Please go ahead.
Thank you for taking my question, sir. My first question is, all food operators, including you, are very optimistic on the demand revival around Q3. Now, since the festival season is just 2 months away, have you seen a demand reviving in smaller towns or inflation moderating to a larger extent for your business? Just wanted to get a sense on how confident you are about business performance in the second half of the year.
Thanks, Kapil. No, it looks very encouraging. If you look at our past 5-month data also, I think we reached our lowest point in the month of February this calendar year. And post that, February till around June, we have seen sequential month-on-month improvement, both in terms of top line and also margins. Going forward, at least in our business, Q2 generally is a lower quarter given a lot of vegetarian days. So Shravan months have already started, and this time around this period is longer, around 1.5 months. So to that extent, we saw some dip in July, but otherwise, on a like-to-like basis, even for 7 days last year, 7 days this year, the growth continues. With this momentum, I think I'm also on the same bucket, which we believe that second half of the year should be really strong. Also, given the fact that the base impact will also kick in because last year second half has not performed that well.
Okay, that helps. My second question is, dine-in volumes grew 20% sequentially. So, what has been the trend of volume growth earlier between Q1 and Q4? Since we have limited history, the pre-COVID times would really help you.
So you mean historical growth between Q4 and Q1 in the historical period?
Yes.
Yeah. So pre-COVID, I think typically the business growth is around 8%. And out of that, around 5% is typically volume growth, and 3% is price hike. Historically, we normally took price hike in two periods. One is beginning of the year, and one is around the beginning of the second half. So total revenue growth was around 8%, which this time around is around 16% on a sequential basis.
Okay. And around my final question would be on Dumbstuffer. No mention about this in your presentation. So just looking at the smart recovery and delivery volumes, how much revenue has Dumbstuffer reached, and what would have been the ADS here?
So Dumbstuffer is now across 80% of our outlet. We are, I think we've done approximately 6.5-7 crore in the previous 6.5 crore in the previous quarter on that. And there is a month-on-month increase on ADS in Dumbstuffer. On an average, it would be around 5,000 rupees ADS per day.
So I guess earlier we were at 7,000, right? So has it gone down?
No. So that 7,000 was only for stores that we started in the first phase. Okay. So the first phase 7,000 is approximately 11,000 right now.
Okay. Thank you.
So this is expanded. This reached to 80% of our outlets over a period of 4 quarters, right? So the first phase includes restaurants that we had opened up in August and September last year.
Right. Thank you so much, sir.
Thank you, Kapil.
Thank you. Anyone who wishes to ask a question at this time, they may please press star and 1. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good evening. My first question was on the margins in the matured stores. So, now we've gone from 19% to about 14 odd percent. If you look at, say, Q2 to Q1, Q2 23 to Q1 24, while sales revenue per outlet is broadly in a similar trajectory, 6.7 crores and 6.5 crores. So, would you attribute this 500 bits only to the to the increased promotions that you've done quarter on quarter?
So largely that around 2.5% of that will also come from gross margin, which is largely the impact of the lower price realization, and the balance 2% would be the revenues are lower by around 3%, so maybe 1.5% will come from that. But overall, this portfolio is also recovering well now. So if you look at versus quarter 4 versus now, ideally with the increase in revenues, some bit of this should flow to your margins, but we lost because of only lower price realization.
And by when do you think you'll be comfortable with the footfall number and you can kind of phase out the promotions?
So look, this is already phased out. So we did this aggressively in April. We also spoke about this in our last call.
Yeah.
And then from July onwards, it has been phased out. And in fact, if you look at our gross margin numbers in July, it has reverted back to around 66.5% that we used to do historically.
Got it. Second question was on the closures. So you've done 8 closures. Could you give us a sense of what that number could look like in the near term, given what visibility you have, and also the benefit of these closures, on the margins. Do you start to see it from Q2, especially of these 8 closures? I'm assuming it's been done through the quarter. So.
Yeah, so it's been done through the quarters, but typically there is some notice pay, some also additional expenditures if we close. So I think Q3 onwards it will definitely start flowing. So did you ask in terms of other closures going forward, or?
Yes, also that's the other question.
Yeah, so as of now, I think maybe 5 odd restaurants would be under very close watch. I think out of this, 2 or 3 will definitely close in this quarter, and another 2 will take a call in quarter 3 if required. Other than this 5 portfolio, I think largely I don't see that this needs to be reevaluated. And I think we'll be done with our portfolio, I think, reconfiguration.
Got it. Those were my 2 questions. I'll come back for more. Thank you.
Thank you, Harit.
Thank you. The next question is from the line of Manish Poddar from Motilal Oswal. Please go ahead.
Hi, Rahul. Just a continuation to the earlier one. So, can you call up, let's say, this 8 restaurants which you have closed? Now, what was generally the vintage of that, and how much is the actual EBITDA loss there? And why did you close it actually? So, why take the decision now? Because I thought during COVID you've done a lot of downscaling already. So, what is really changing? So, 3 parts. One is absolute EBITDA loss. Why close now? And vintage is the third part.
Right. So let me first give you data point numbers. Absolute EBITDA loss for the quarter on this would be approximately 1.2 crores. These are the store level. Vintage-wise, these are all part of mature buckets. This is not new bucket, barring one, which is a new bucket. In terms of tiers, 4 of them are in tier 2, tier 3 markets, and 4 of them are in metro tier 1 markets. In some, there is also they have lived through the entire life of 12 years, and rents have gone up to a particular level which has not been supported, and our discussions on rental negotiation being going well. And out of this, 2 of them will revisit and go back to the same trade area because we're talking to a site which is close by, but didn't want to take losses in the current scenario. Why now? Look, all of these are at the second. And also, so just to clarify, during COVID times, on the entire portfolio of close to 160 odd restaurants, there are only closed 3 restaurants, right? And out of those 3, 2 were in Bombay and 1 in Delhi. Those were profit-making restaurants, but we closed them because our rental discussions on them didn't sort of go well. In the current one, I think with the expansion that we have done, some of the demands would have also shifted to the other place. And when we reevaluated all of these portfolios, we thought at least in the metro market, metro and tier 1 market, these 4 were not making any sense.
So if I could just look at this mature restaurants basket, excluding this, let's say 8, what is the margin there? So I don't have the revenue numbers. I'm just trying to
0.5, maybe 0.5% improvement there overall basis. So 14.3 will go to say 15.
Okay. And so if I look at this, the scheme of the promotions page in the deck, so do you think because effectively, and I'm not sure if this is pan India, there are schemes for every day from Monday to Thursday in terms of lunch. So is there a schemes or there is discounted price? So is this in the regular course of business? This was the case earlier also, or the scheme intensities, because once you roll it out, to roll it back with corporate customers, let's say if they're on for this lunch meals, it'll be a difficult task, right? So I'm just trying to think through it. Is this a regular course of business, or when was the similar thing witnessed by you all earlier?
No, so one to clarify, this is not just lunch. This is both lunch and dinner, and typically this is not corporate customer, because corporate customer largely come on second half of the week, which is Wednesday and normally Friday. This is more of Monday, Tuesday, which are the leanest day in our business, and we try to drive some value-seeking customer who can't afford say our product on a weekend pricing, right? So we always had the differential pricing, but on these days, and it's selective, right? In some days it's $5.99, in some days it's $6.99, also in few markets, metro markets. So it's by outlet based on what is the term which each of these outlet does. And this was a limited time offer which has given us very positive results. So if you look at our current pricing basket, this price has gone up by approximately 150 rupees across all markets now.
And this is Monday to Thursday, right? This is on Monday, Tuesday, because I see two offers, Monday to Tuesday and Tuesday to Thursday.
Look, this is not pan-India, so there's different offers in different markets. So in some markets, it's only Happy Monday, Tuesday. In some markets, only Terrific Thursday. In some markets, it's midweek offer, which is Monday to Thursday. Sorry, Tuesday to Thursday. So midweek is like that.
Okay.
So it is not one offer for pan-India. It's based on what is the cable term, what is the capacity utilization, which day part is not working for us, and that's the way they've done it. And the promotions are largely digital targeted promotions.
And sorry, just this part. When was this last done by you? And as in this sort of promotion intensity, when was it last done? And does it do the customers retrace back to the full pricing? Is that a difficult task? Just your thoughts on that.
So look, last quarter, obviously, we were looking at low demand scenario, right? And if you look at other businesses also, people are down trading, lower, average realizations. Unfortunately, in our business, we only have one segment, which is all you can eat, right? So if the price point is X, I don't have an option for customers to go and say that now you only take these 4 items and pay less than that, right? So the purpose of these campaigns was to ensure that how do you capture some of the value conscious market customers and somebody who's been hit by the current demand scenario. So we only did it with that perspective. So this was not done on weekends. Weekends were pretty good. And if I look at the growth numbers versus quarter 4, the 20% volume sequential growth that I'm talking about. If I look at our weekday sales, which is Monday to Thursday, the growth numbers are around 28%. Our weekend volume growth is around 12 to 15%. So what also happens is that this gets a talking point. Is also it's something that leads to recall, and we've also get the rubber effect on this in other day parts also.
Thank you. Mr. Poddar, request you to join the queue for any follow-ups. Also, before we take the next question, I'd like to remind the participant to limit their questions to 2 to 3 questions per participant. Thank you. The next question is from the line of Shubh from Emerge Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Can you please give the split of number of mature stores versus new stores and the operating margins with Ind AS?
Number of outlets, so quarter 1 would have around 152 or so, and the balance would be new store. And operating margin with Ind AS, I don't have it. Vijay, can you give the exact numbers? Vijay? Okay, so I'll get it sent to you, but typically I think there is additional 8% which sort of comes through from that.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Sakshi Chabra from Swan Investments. Please go ahead.
Hi, sir. So I had 2 questions. My first question was that what is the driving factor behind this increase in the delivery volumes and sales?
So, no doubt we've been talking about it, a lot of things about our product, our menu engineering, our packaging engineering, and those things have been starting to play out sequentially since February. We've also kept our mix same, which is a la carte and box sales. And whatever deterioration that we had seen in the previous quarters in our delivery revenue numbers was on account of decline in average order value. And average order value has been now pretty stable for now 5-6 quarters. And whatever increase that we're seeing is on the volume front.
Okay. So what would the average order value be on the delivery side?
Approximately 500 rupees.
Okay.
This is next to us. This is after GST, after discount.
Okay. And how do you see this panning out going forward? Like you see this sort of growth sustainable on the delivery side?
Yes, we hope so. At least over the last 7 quarters, this is one of the best. I think this growth numbers are also continuing in the current quarter also. So it should do well.
Okay. And so I wanted to understand one thing on your matured stores. So if we even see the ADS, which is in Q1 versus Q2 of last year, which is like Q2 is usually the weakest quarter for you. So even compared to that, the ADS has been lower in this quarter. So what is going to be our strategy going forward to improve this?
So yeah, look, over the last 5 quarters, what has happened is we have added more capacity, and generally there's some demand pressures on discretionary spends, right? So with the mix of that, if you look at the trend of quarter on quarter was in terms of last year, we have come down from almost 7 crores to 5.7 crore in quarter 4, right?
Right.
So the task was how do you get more people inside? So and I think we called this out last quarter also, that our focus is volume growth, and we have achieved that as compared to what we did in quarter 4. We have done better than what normally is the trend between quarter 4 and quarter 1. So our focus first was to see what changes you can make on your existing operations, be it in terms of culinary innovations, be it in terms of asset upgradations. While that is continuous work, but by and large, a lot of work has gone into that in quarter 3 and quarter 4 last year. The second step was how do you get your volumes and revenues back. I think we've got our volumes on an upward trend, and revenues also are reflecting accordingly. And the third step is our margins, which is what we are working on, both as a factor of improvement in terms of our gross margin and also some cost optimization. Right. This will obviously take maybe 1 or 2 more quarters. We're taking a hard look at our portfolio. But what I can say now is that, have we reached the bottom in the previous quarter? I believe so. Right, based on what other industries are also talking about, some improvement, sequential growth. I think that should also start reflecting in our numbers.
Okay, and what is the kind of SSG growth that you would be targeting in the coming few years?
So long term, we target 5 to 7%, right? And if I look at last 10-year history, we've delivered that. Quarter 1 obviously started with a negative number. So a lot of catching up has to be done. So in today's sitting today, it's very difficult to give you a number, but I think it should be better than what we have done in quarter 1, based on what we are seeing in our business. So please give me 1 more quarter, and then it is easier for me to give you an estimate.
Sure. Okay. But with the current sentiment and Q2 being weak, you will have to keep giving further promotions and offers, right? So your volume growth you may still get, but on the pricing side, for another sometime you'll keep doing these sort of promotional offers so that you can drive footfalls.
No, look, it's very tactical, right? So like I said, the pricing is back, the gross margins are back in the month of July itself, right? So you keep running some of these tactical offers, promotional offers to get a customer back. And when they convert into repeat customer, and when they see the amount of work that has happened, be it on the asset, be it in terms of food, I think the repeated numbers will come in. And the better reflection also is our internal guest satisfaction scores, right? We track it very closely. And in the current year, while last year also was very good, in the current year we are even higher than last year, right? And if you look at the sub part of our feedback score, our food feedback score is even higher. Our service feedback score is flattish, and our asset look and feel ambience feedback score is also higher. So those things give me comfort that, and we also seen the improvement in quarter 1 versus last quarter, right? So hopefully it should continue based on the daily feedback that it's getting from our guests.
Right. Okay. Thank you so much, and all the best.
Thank you, Sakshi.
Thank you. The next question is from the line of Faisal Zubair Hawa from H.E. Hawa and Company. Please go ahead. Faisal, your line is unmuted. Please unmute yourself and proceed. It seems there's no response from the current participant, hence we'll move to our next question. That is from the line of Sanjeev Goswami from Fractal Capital Investment. Please go ahead.
Hi, thanks for the opportunity. So I had a couple of questions around the store expansion. What I understand is you want to add 4 new stores. And
Sanjeev, your voice is breaking. May I request you to please repeat your question using your handset?
Yeah, is it better now?
Yes.
Hello.
Go ahead, please.
Yeah. So I had a couple of questions around the store expansion. From what I added, gross 4 new stores and net was -4 because you closed 4 stores. If I look at last 3 years, most of the additions that you've had done, they have been happening in metro and tier 1 cities. 59 restaurants in metro and tier 1 cities, which is only 4 in tier 2 and tier 3 cities. Now I have 2 questions. One, when you talk about your addition of 20 new stores this year, in this financial year, is it on a gross level or net level? And second, what kind of cities it will happen?
Oh, this number is on gross level, not on net level right now. And in terms of our city expansion, I think let's look at 3 parts. One is Barbeque Nation brand, both India and internationally separately, and Toscano. Our international business and Toscano business are on a different trajectory, both in terms of profitability and SSSG. So there we'll expand. Toscano, we have already opened 1 more already in this quarter. And we have under discussion pipeline of around 4-5 restaurants, right? So maybe 2 or 3 more will come from that. So overall 5 will come from that. International again, we have 1 more which will come up in this quarter, and then maybe 1 more in quarter 4. So we'll have 3 coming from that, and 12 will come from Barbeque Nation in India on a gross basis.
Okay. Now, Rahul, if you look from a perspective of 290 stores, which opened before the COVID basically, and what the new format that you have, what is the capex per store? What has been changed in terms of capex per store and also staffing per store or per restaurant?
Sorry, capex and what is the second part you said?
Staffing per restaurant.
Starting as in revenue.
Staffing, number of employees per restaurant.
Number of staff. Okay. So in terms of capex, it has slightly gone up. We are currently around 3.1 crores per outlet, and staffing depends on size of the restaurant. So typically around 4,000 square feet area would have around 40 odd staff in the restaurants, and this includes both front of the house, back of the house, housekeeping, everything.
Okay, and how does it compare with pre-COVID numbers?
So it's pretty similar. I think between pre-COVID and now, we have kept same, but the only efficiency has come from the fact that we have also not added incremental staff, despite the fact that we have added delivery business, which is around 15% of our revenues.
If I can have just 1 more question actually on the commissary part. I understand that we have 2 commissaries, right?
Yeah.
Okay, one is in Delhi and one is in Mumbai.
Bombay. Yeah.
Okay, Bombay. So how many minimum outlets do you need to start a commissary in a region? And what is the capex for 1 commissary?
So commissary is not the model that we are pursuing anymore. These were historical commissaries, and when they were built, some of the restaurants that were built were not designed to have large kitchen areas, right? So we're continuing with those commissaries. But as you know, we currently operate in over 80 cities, and most of our operations have moved towards various standardized products, wherein we rely on ready-to-cook products and a lot of vendor-driven standardized items that we procure from them. So commissary is no longer an integral part of our strategy. So for example, Bangalore, we have around 18 outlets of Barbeque Nation, and we don't operate a commissary here.
Okay. So probably in the future you can look at closing down the commissary probably.
We can look at optimizing. I think closures would be difficult. As I said, some of the outlets they support don't have that large kitchen right now.
Okay.
So there's a design in that manner, yeah.
Okay, thanks a lot. Yeah.
Thank you, Sujit.
Thank you. Any participants who wish to ask a question at this time, they may please press star and one. The next question is from the line of Weber from BMB Investments. Please go ahead.
Yeah, have you mentioned in the last quarter that this quarter your focus will be on improving the SSG? Considering that, still this quarter SSG is negative. And so this is the reason for this is the Indian consumption market or anything else? Is that demand a problem or anything else?
So clearly demand was the problem, and like I said, last quarter we focused on SSG. If you compare it versus quarter one on a higher base, it is low. But if you compare it against a trend versus last quarter, it has started to trend up. And we believe that as demand recovery also happens, which at least we're optimistic that it should happen in second half of the year, it should move towards positive territory also.
And you told that the capex will be 3.1 crore. So considering that, what will be the depreciation per year from now onwards per outlet? Depreciation per outlet.
So typically, on an overall number, we have around 37 crore. This also includes entries related to Ind AS 116. Without that, the number is around 18 odd crores, which would be, so this was a quarter. So this would be around 3 to 4 lakh rupees per
outlet.
Yeah, per outlet per month.
Yeah.
So around 40 lakh rupees per outlet per year.
Okay, thank you.
Thank you. The next question is from the line of Khush Gosrani from Incredible Asset Management. Please go ahead.
Yeah, hi sir. Sir, could you help us to understand the store mix between North, South, East and West?
So it's pretty similar across all. If you look at 192 Barbeque Nation restaurants, it is evenly divided across all territories. So when you look at East, we also look at APTS in that, but without that, if you look at core East, which is Bihar, Jharkhand, and Northeast states and West Bengal, this would have around 25 outlets.
Sure. And sir, if I just look at the per store revenue outlets that you are going mature and new stores, I think so the revenue part is improving very constantly. It is where the EBITDA margins, where the profitability that we need to focus. So what are the steps that you are taking as of now to recover to the profitability that we have done?
So a couple of percentage points will straight away. Sorry.
Yeah, sure, please.
So a couple of percentage points will straight away come from gross margin expansion, which we are seeing already, and the balance will come from increase in revenues in these and operating leverage. While some cost optimization work has also been undertaken, that should give us another 50 basis points expansion there.
Sure. And lastly, since you are curtailing down these promotional expenses, you are still seeing the volume remaining at the levels, or it is declining as well as the August month is rolling?
No, so volumes are better, but if you look at quarter two last year versus quarter two this year, there are difference in dates with respect to Shravan impacts. So Shravan last year started earlier, this year started earlier than last year. So barring those impacts, the volumes are holding up. And Shravan does impact us in strongly in markets like North, UP, and also West.
Sure. Okay, sure. And for the overall, when are you internally planning to reach the EBITDA margins that we were doing pre-COVID, or at least at the peak that we have done?
So it's improving on quarter-on-quarter basis. So it's difficult for me to call out. It also depends on a lot of factors. But I think my estimate is from quarter three onwards, we should start seeing a very good positive impact on the numbers.
And
That's
my
also
last question.
yeah.
Yeah, sorry, please go ahead. Sorry.
It's also subject to a general, improvement in demand scenario that we are all expecting in quarter two, second half of the year.
And one last question, sir. You have written in the deck you want to target is to add 20 new restaurants. This is on the net basis, right?
No, gross basis. I should have clarified that.
Achha, on gross basis. And okay, so then what on net basis you would be only adding to 12 stores, 13 stores, sorry?
No, yeah, around 10 odds, because in this quarter also we might have couple of closures. So look, on the store front, let me clarify. We are long-term believers in obviously our model, right? Both Barbeque Nation, Toscano, international opportunities. I think today the time is not to expand, and opening stores are relatively easier. We have history of opening up 10, 11 restaurants every quarter, or 3 to 4 restaurants every month. Right. All we are saying is that today, given the capacity that we have created, it's time to utilize that capacity and increase your revenues from the existing capacity that is created rather than opening up new capacity. So rest assured, the moment we see that happening, and the signs are very encouraging based on our month-on-month performance over the last 6 months, we'll speed up on expansion also very quickly.
Sure. Okay. Thank you, sir. That's it from this.
Thank you.
The next question is from the line of Maithili Balakrishnan from Alchemy Capital Management. Please go ahead.
Hi, Rahul. Good set of numbers given the demand environment. Just a couple of questions. First, if you could help us with the cash from operations, capex and FCF in the pre-Ind AS world for the quarter.
Yes. So cash was around 16 odd crores. This is cash profit I'm talking about. So out of 18.5 crores of pre-Ind AS EBITDA, we have 16 crores of cash coming. Capex was around 30 odd crores. Now this includes 4 new restaurants. So one of them is international, so slightly higher Capex. And also 2 renovations that we have done during the quarter, and money that we'll spend on maintenance and general upgrade of our few of our assets. Yeah, that's it.
And
sorry, is there something else, Maithili? Yeah.
In terms of the demand trends, also wanted to get a sense, is there any difference which you're seeing in terms of tier 1, tier 2, in terms of metros, in terms of malls, high streets, etc.? If you could sort of just help with that.
No, so if I look at last quarter versus this quarter, given that we are around 20% growth, we have seen growth pretty much across all verticals. Just that weekdays have done better than weekends. Weekends also have grown in double digits. In terms of geographical spread, barring 1 or 2 cities in south, we have seen very broad-based, growth. In fact, tier 1, tier 2 also has reacted extremely well to some of the promotions that we have done. And the numbers I'm talking about is more on volume based rather than just overall revenue based. But revenue based also will be pretty similar. So tier 1, tier 2 also is responded very well to the price based offers.
Got it. Rahul, given and just to get a sense, like how much of your revenues would be from repeat customers, given that you do track them with some, form of the cell phone numbers, etc.?
So it's around 50-50. So if I look at on a daily basis, whatever customers who dine with us, 50% customers are our existing customers, which means that we have their mobile numbers in our system before, and 50% are new customers. But as I always said, you should look at this data with the fact that our average group size is around 4.5, right? So every time, say, 4 or 5 people come to us, you only get 1 mobile number. So at least 50% repeat is also very good. And if I apply a factor of, say, 2 also, or 1.5 also, it's around 75% business pretty typically comes from repeat.
Got it. And in terms of a loyalty program or something like that, what would be your sense of, have you tried experimenting on that front as well to drive volumes?
So our loyalty program is app-based, and we get almost 30% of our revenues coming from our own app, and that's doing very well, growing month on month. You'll see that number lower this quarter is because we have a property called Happiness Card, which became unattractive in few days because the pricing in the outlet itself was lower during those days. That's why this number is down. But otherwise, structurally, our total happiness card conversion on weekends are still very good. So, sorry, coming back to loyalty, around 30% business comes from loyalty and almost from app, and almost 12 to 14% of our customers who dine with us have the loyalty points added to that in their transactions.
Got it. And also, lastly, right, in terms of this seasonality, as we move into...
Sorry, Maithili, your audio is not audible at all.
Okay, is this better?
Yes.
Yes.
Yeah. Sorry, just wanted to get a sense of the seasonality as you head into Q2 from Q1, while Q2 tends to be weak. Just wanted to get a sense of how much has it normally been down by as compared to the previous quarter, and any indications of how it has been so far?
So around low single digit, 4 to 5% between Q2 and Q1. Okay. And currently, as I said, it's stable. The only gap is...
You are not including the fact that on a normal Q2 you would have had more stores than what you have had in a Q1, right?
No, it is including that. So last time also when I said it's 8% growth normally versus now 15% growth in this quarter, this includes overall business.
Okay. So it is normally a 4 to 5% decline between Q2 and Q1.
Yeah.
Got it. And this time are we trending similar or worse because of a longer Shravan?
So till now, pretty similar, but also realize that the longer Shravan days have covered I think the first 37, 38 days. So I think going forward, if I look at like 7 days, we are actually better than last year.
Got it. Thanks a lot, Rahul. Thanks a lot for this. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that would be our last question for today. On behalf of Ambit Capital, that concludes today's conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.
Yes.